Okay, welcome everyone. We'll start our second lesson, which is about financial decision making for healthcare managers. My name is Anjum Satar, and my email address anjum@ukversity.co.uk. So, of course, we are doing the unit number 5, financial decision making for healthcare managers, and today lesson will cover our LO2. LO2 is our learning outcome 2, and our learning outcome understand the different sources of finance. So today lesson will go through the sources of finance. Those are available for health and social care organization. So when we'll discuss about health and social care organization, it's come the hospital, government as well as the private organization. So it can be private sector as well, public sector as well. So which will go through in detail both sector, because both can be in under the healthcare sector. So anybody any question? If you have, please drop me email. If you're just listening, this is recording, and we'll go through what we cover under this LO2 learning outcome. So what we're supposed to discuss today: business finance needs and sources of finance. Long term, what is meant by long term? Long term means the more than a year. The asset which we use, non-current asset. Non-current asset means the asset which we can building, plant, machinery, or hospital, or the land you want to buy, and you need a finance for it, is called non-current asset. Asset which we can use it for more than a year, that's called non-current. Short-term finance, the money which is required to meet the short-term need for the business, like working capital. Working capital is known as a running capital in the business, which is consist of current asset and current liability. So current asset, like if you have overdraft, why you use overdraft? It is for the short-term period. That's why you need a finance to meet your short-term needs. Exactly, it's happened in the business environment as well, and in hospital, in the healthcare as well. We need to meet urgent needs. We can use short-term finance, which will go through the working capital for the business community, cost of finance, what is meant by how much is the interest, so which we need to go through. Luckily, and we need to really good understanding base rate. Base rate is mean the rate which is set by the Central Bank of England in the UK, in the England, and another part of the world is maybe called state bank. Central bank, also known as a state bank. We have a base rate now is dropped down to 0.25%, which is quite low. So its impact on when you borrow, you can maybe borrow, you can depend on your credit scoring, you can borrow the money on 2% interest rate. So all this will discuss short term and the long term advantages and disadvantages of different sources of finance. Before moving forward today, we'll discuss what we will recap what we learned during our previous lesson. So we'll look what we learned during our previous lesson under LO1. Under LO1, we discuss about the role of financial information. We discuss information is a knowledge for organization, and with information we can get from internal and external sources. Internal sources, we discuss about different management reports for management accounting, where you can calculate the cost and things we discuss. We discuss how many types of financial statement we prepare in healthcare, like other organization as well. Statement of profit and loss, statement of financial position, which is also known as a balance sheet. We discuss the cash flow statement, and we discuss the chain in equity or the shareholder statement in our lesson 1. We also discuss about the role of information, why information is required, the help to make the decision, and then we discuss about describe the key financial ratios. We discuss 4 categories of ratios. We discuss about profitability, liquidity, use of resources, and gearing ratio we discussed in previous lesson. So today lesson we have 2 key command verbs: differentiate between the long term and the short term. So long term mean more than a year at least, and the short term mean the less than a year, whatever the money you require for the organization to run effectively in health and social care organization. So these are the sources of finance, which we'll go through in detail in our slides as well. So explain, which will go through explain, what is meant by explain, and then we'll discuss about evaluate, how we can evaluate the sources of finance impact on the overall performance of organization. So our second lesson, which we'll go through, I already discussed with you in active content what we're supposed to be cover, the keywords we can say, the theories which we're supposed to be learn under the LO. Okay, excuse me. Let's we'll go through. So today lesson is key are evaluate. So these are the make qualitative judgment and taking into account different factors and using available knowledge about the sources of finance, which we'll go through in detail in further slides. So we'll go through the differentiate between the long-term and the short-term business finance needs, healthcare, and the social care organization. So what is meant by, so first we'll go through what are the sources of finance available for any organization, healthcare, or in a business organizations as well. So if we're looking sources of finance, finance we can divide into short term and the long term. Short term, normally for less than a year, the time scale. The long term, it can be more than a year, like different, and we always look the risk and return, and there are financial for the small and the medium sized organization. So all this which, hello. Hello. Okay, so these will go through. Okay, this will go through and we'll discuss. Equity means the shares. The shares we can divide equity financing and the debt financing. Equity means you issue shares to the public, and that can be our sources of finance. Debt means you get the loan from, and leasing and the venture capital. Leasing is normally the lease capital. Lease capital is meant by lease have two types: finance lease and the business finance lease and operating lease. If you have a finance lease, the day first asset will be yours and you can use. So we can raise money by using different sources of finance in normal business, which we'll go through further in detail on next slide. So the healthcare management financial system, in most market, buyer and the seller trade directly. A person who want to buy things, they can pay the money and they can buy the bread like such. A person who want to buy an automobile, so pays the dealer for the car. Welcome. Okay.
Hello.
Hello, welcome. You okay?
I am, yes.
Okay, great. So today we are discussing about sources of finance for healthcare business, so which will go through different sources of finance and why we need to borrow money, and what impact will be on the business if we are doing private healthcare business. And of course, if it's a government hospital, normally the government fund or some private, organization, other some charity activity can fund. So healthcare market, of course, which will discuss different businesses. People want insure against the large amount uncertain illness. So that can be one of government can be give the finance to the hospital, and of course through the tax system. So which is especially in the UK is coming money from the government. And then further we'll go through in detail short term and long term. So what it meant by short term? What we know about short term? Anything about short term? Short term sources of finance?
Not sure.
Okay, short term mean less than a year. If you need the money less than a year, we can call short term. Long term normally is meant by more than a year. So if you need to buy some stock like a medicine, you can use the source of finance in the short term. But if you need to buy a building or plant or machinery or X-ray machine or different sort of machinery in a hospital, you use the long-term source of finance because this asset you will use for the long period of time and it's cost you more and you need more money for it. And if you just need a little money to pay the salaries to your workers and you don't have a cash, you can use the short-term finance, and we can even use the overdraft if we have our credit card or the business cards, which normally business credit card. So when we make a decision of which source of finance, always we need to look around the cost. How much is cost? If I'll go for the short term, normally short term is expensive than the long term commitment. Long term is a normally cheaper source of finance. So we need to look around. Is it best to go for the short term? It will meet my short term business needs, or I need to go for the long term? Because normally our draft can be expensive as well. Then we can get the money from the bank, which is called debt financing and equity financing. Equity means shares. We can issue shares to the public to raise the money. We can generate the money through. Normally, debt is a cheaper than equity, because if you invest in the company and you buy a share of any company, normally you expect more return on your investment compared to if you deposit money in the bank, because the deposit money in the bank and you get the interest on it, which is less risky, because of course behind is the state bank or the central bank give you the surety, is a guarantee there. But if you have a dividend, think about last 3-4 days, what's happened stock exchange? Do you know what happened with stock exchange?
It changes quite often.
Yes, it's around 10%. UK stock exchange FTSE index is dropped 10%. In America 14%. In Germany around 12%. In Spain around 15 to 20%. So is the business share value significant drop? So is due to this virus, coronavirus. So we need to think about which one is, because equity is more costly business really, but is a more risk as well as for the investor point of view. So which we'll go through. Next now, duration. You need to make a decision how long you need this money. Is it you need short term, you need a long term, and then you can make the decision based on the interest rate. What will be the interest rate which will go through? Term and structure interest rate. Do we know what is the base rate?
No.
Okay, base rate is called the basic interest rate, which is set by the central bank. In other part of the world, it's called state bank. So we have our state within the UK yesterday is the rate dropped down to 0.25%. Is a quarter a cent, which is another part of the world maybe 2%, 5%, 10% is a central bank basic rate, and all other bank they charge more than the basic rate, which is normally they add the basic rate plus 2%. That 2% can be their admin fees, administration, or the profit element. So that's we need to look around. So that's we need to look around as well to make a decision. Any question?
No, that's
Okay, next we're looking the gearing. If you drive your car in a high gear, what will be happen? More than the speed limit. It's a more risk, yes?
Yes.
If we have a more debt, we borrow a lot of money, we will be default, yes?
Yes.
So that's why we issue the shares and the debt. Shares is also, but the shareholder are the owner in the business. They have a part in the business. But the debt is we must have to pay. But if we don't pay the dividend to the shareholder, if we don't earn it, They don't mind it maybe 1 or 2 years. Yes, so but still they want to get the return. They want more than. So normally we say 60% debt and 40% equity. So 40% money we can generate to shares by issuing shares, and 60% we can borrow money by getting the loan from various lenders. Any question?
No, that's okay. Thank you.
Okay. Accessibility. Not all the company have access all the sources of finance. So if we are NHS, of course, is we can't really issue the shares to the public because we're not earning profit. We're not a profit organization. So we need to give the tender or the quotation to government, local council, or the insurance company. We say the patient, they will get buy the insurance from medical insurance. So we can charge money from them, and that's the way. Or if we have a spare building, maybe we can rent out or we can sell it, so we can generate some money. So that's we need to be look around the accessibility side of the funds. Any question?
No, that's okay. Thank you.
Okay, so in the first 2.1 we discuss about the short term and the long term. Yes. So short term is a year overdraft, or if we have a already retained profit in our organization, that's we can use it. If the cash, or if we have a spare asset, we can sell it, we can generate it. Long term, we can issue shares, or we can borrow money from the banks. So that's a debt end. Next, we're looking explain the sources of finance available to health and social care organization. Personal source. If your own business, you are a, let's say, healthcare, or you're a trainer, or you offering the training business, and thus you can invest your own saving if you have. Retained profit is the money we retain it from the previous year's profit, we can reinvest in the business. That can be a source of finance. Shared capital, you can issue shares to the public and you can get the money from. Then sources of finance. Each source of finance has an advantage and disadvantage. If we have a share, we need to pay the higher dividend more than the interest rate, because otherwise shareholder won't be happy with us, and they will they can sell the shares too, and the share value can be dropped. And the shareholder, if we issue too many shares, then they have a voting right. They can give the vote against us as a director of the company, and maybe we will be out of the job. So that's all the consequences we need to look around. Loan, capital, bank loan, and bank overdraft, we need to look around the interest. So always we need to look around the interest. How much will cost me if I borrow 50,000, 5%? What will cost me if I'll go for the dividend? What cost me if I'll go for overdraft? What rate bank will be charged from me? So overdraft we can use it. Okay, share capital, outside investor. Yes, outside investor can be invest. Then we can maybe ask the business angels. Those are the rich people. They can invest in your company, or we can make them partner in a company, and we can pay the share of the profit to them. So they are maybe happy to invest in certain businesses. You have an idea, you have a skill, you have a knowledge, but we don't have a money, so they are happy to invest in our. So thus we can look the sources of finance as well as the business angel in even healthcare business. Venture capital. So we have a different venture capital company where the people have lot of and they have a different investor. They put the fund, and the venture company, they can invest in your company, and the venture capital is available uh, always. Different companies venture capital are different ways we can generate the fund. Have we heard about venture capital?
No, I've not heard about it.
Like especially the private sector hospital, lot of private, like a pension fund goes to the venture capital, and that fund can be used for the various businesses as well. And at the end of the day, of course, your pension fund is a carry on circulating, and when you will be retired, you can get your money. Yes. So that's the way they generate money from money. So we can use the venture capital fund as well. Okay. So who should fund and provide healthcare? Should healthcare treatment be provided by the states free at point of need, or should market play a bigger role? What we think? Is it only government will provide, or is it we'll look after ourselves, our health?
Yeah, ourselves as well, isn't
Yes, because if the states is charging the taxes, and within the tax is the percentage of your salary is charged for the NHS as well. So like in the UK is, of course, the insurance, national insurance is 10%, and the salary is going state 7-8% towards NHS. So scale and the scope of priorities. How important is the healthcare to economy? Yes, of course, healthcare is a very important to economy. Think about if someone not healthy, how they can work, and then of course shortage of the staff and things. We need to be think about as well. Like the government ban on smoking, so to advertise the cigarette and sell the cigarette is a lot of revenue for the government was, but the government stop it even on advertising. So they're not generating a lot of taxes through the selling this tobacco. The reason now because it used to be a lot of sports sponsored even these tobacco companies, but not anymore because the health is a key thing. If one person, so that's the government is looking the long term perspective, not short term. So short run and the long term run. In the long run can be free NHS, be sustained. So we can ask question: is it everyone get the free? So if everyone get the free, maybe it's no money available for NHS to buy everything or pay the doctors or recruit more doctors. So we need to think about maybe will some people will get insurance, some people will, yes, or we can put the limits on. Equity and fairness. Many people see free access, the high quality of healthcare as a right, and the fundamental issue is the fairness and so we can those contribute, those don't contribute. Sometimes the problem you work, you contribute, those don't work, those on benefit, those don't contribute anything. So everyone get the equal opportunity. So it's not a fairness in a way. So what are the alternative way of providing healthcare? Strong evaluation draw from different countries. They different country like in US is a private healthcare. Okay. The case for the state government healthcare helps to provide the equal equality of access the key healthcare resources not based on the people ability to pay. State funding service can be impartial advice and helping to some information failure by making healthcare cheap and readily available. It could be promote the consumption, thereby the of course GDP. We need to if it's a rise, it's increase because the GDP is a gross domestic product growth rate in economy. No, is significant drop in various countries due to this, the coronavirus. Positive, of course, we need to look on the merit of good aspect of afford and the wider accessibility and the larger provider healthcare can be enjoy the economies of scale. Economies of scale mean the cheaper cost, yes. So we can look around alternative funding. Healthcare in the UK is a critical evaluation in the micro environment and the micro environment, internal and external. Assess the alternative available. Different alternative we need to look around. That's why NHS is really looking the outsourcing some work. Some they looking to be go through the insurance. Some people, lot of people going through the private. So is a less burden on NHS. They are offering using the latest technology and via using Skype, the healthcare service. So you can get the advice from GP. Incentive to take out private insurance. You will get the private insurance. You will be more incentive. The prescription charges, yes, it says £7.50 per medicine subscription or prescriptions, we can say. So that's a basic medicine. Private hotel style beds, raise extra revenue. Yes, we can. Or we can promote our NHS in other part of the world. So if the patient come to you, you can charge the money from them. Basic annual NHS subscription system, so people can pay annual. And more health tourism in overseas country. Yes, we can offer the services and fund preventive programs, so we can look around those. That can be different sources of fund. Any question?
No, that's okay, thank you.
Okay. Next, 2.3, we need to evaluate the implication of different sources of finance. So if we have a too much money you borrow, so it means you have a too much debtors. Sorry, if you sell, the things too much on the credit to the people, or you give them free service, maybe you have a lot of people have outstanding bills to pay NHS. Like in the past, people used to come to the UK, even used to heart or various operation, and they used to go back, and they not used to pay the bills. But now their government is saying whoever is sponsored, they have to give the surety, and we can receive the money from them. So is that come under the current asset is our receivable? That's we need to look around, which can be huge if we have outstanding bills. It can be implications. We need to look around how much interest we have on if you borrow the money. We need to look around. If we have a lot of the long term borrowing, it can be lot of companies and various projects can be failed because our outgoing can be more. Maybe we're not spending money. A lot of hospital maybe think, oh, it's a new technology, need to be more innovative. Yes, need to be more innovative, but what will be the sources of finance, where the money will come from? That's we need to. Loans and the advantages. If we borrow the loan money, amount repayable at the interval is a fix from the beginning of the agreement. Amount not repayable on the bank demand. Safeguard on the asset in the case you default from the payment, but in some cases disadvantage. Normally interest rate apply per agreement. Every agreement you do with the bank, they charge you interest. Special fees can be if you're using the different loan brokers, and the legal cost is involved as well to make the commitment. Term of the loan would not exceed the usefulness of asset. So if you borrow money to buy the X-ray machine, you need to maybe X-ray machine become outdated and still you have a loan against it. So we need to look around. That can be a consequence. Choosing appropriate source of finance. Yes, you need to make sure if you issue too many shares to the public, what will be happen? The old shares. So now the return or the dividend will be divided various shareholders, and the benefit will be less for overall shareholders. So sometime it can be a disadvantage. The value of the shares will drop. Okay, then information need to be decision making. So we need in our organization, we need to make sure we need to make a decision which source of finance. We need the right information. Bank A, bank B, bank C. You want bond, you want share, you want to be loan, short term loan, long term loan, interest rate, which interest rate are you use? Lease, do we know the lease? How many types of leases? Have we ever bought or buy a car or rent a car?
Yes.
So lease have two types. It's called finance lease and operating lease. Do we know what is the difference between them?
No.
Okay, if you have a finance lease, day first car is yours. The document will be on your name. So all the risk and reward will be yours. If the car value go up, it's yours. If go down, it's yours. And if you're a business owner, from the first year, we can claim from tax office. It's called capital allowance. Capital allowance will help us to reduce our tax bill. Each car different capital allowance available, so we can check from tax office how much is allowance available if I'll go for the finance lease. So we need to decide which one is the best. Second is called operating lease. Operating lease is meant by car is not yours. Car is still the rent company, which is like a rent-a-car, and you paying you paying every month rent, and the rent is treated as expense, and which you can put in the profit and loss account. Any question?
No, that's all right.
So in basis of these, you can make a decision. Maybe if you go for the finance lease, your monthly payment will be higher. If you go the operating lease, your monthly payment will be lower. But car won't be yours. But maybe they offer you service as well, maintenance free. Yes, so you need to decide which one you go. Any question?
No, that's okay, thank you.
Okay, brilliant. So next now we'll look, in the UK, how much is spending, some figures. So NHS spending has risen from 4.7% of GDP to 7.6%. So 7.6% of the national income is going toward health. The reason is because more aging population and 60% people using A&E is accident and emergency. And available hospital beds in last 95% targets, yes, is because less than 4 hours, but unfortunate now we have to wait maybe 7 hours, 8 hours in A&E to get your, you're supposed to see your doctor. So is a huge funded shortage in these due to the free, Okay, next we're looking now, we look some financial statement, NHS in the UK, and we'll see what impact they have on their statements, how they borrow and how much they borrow. So we'll go through. So last lesson, do we remember what we learned?
Yeah, we did about the decision making,
Yes.
and we learned the capital and the profitability, liability.
Excellent. We discuss about statement of profit and loss. We discuss about balance sheet. We discuss about, yes, different sources of information, and we learn 4 ratios. We learn profitability, liquidity, use of resources, and gearing ratio. Yes.
Yes.
And I gave you the formula sheets as well. I send you. Hope so. You can find on Moodle as well. Yes.
Yes.
So today we'll look. These are the actual statement, annual accounts of NHS in England. These figures all given in the millions. Okay. So how much money in and how much money out from? So this is these two, 2017, 18, and 2019, because here the look. How much they paid, how many million they paid on the staff, how many million they paid on various things. At the end, we'll see their comprehensive net expenditures for each year. These are the expenditures. Yes? And how much, this is the cost on the borrowing money, yes? Finance cost. That's showing there. Now we look next. That was the income, yes? And that was the expenditure. So we can say there is a shortfall. So they owe it. Then this is the balance sheet. How much property is worth of? How much intangible asset, the license, and how much money they have to receive from people outstanding bill. Yes. So this outstanding, we can give these invoices to the various banks, and we can maybe raise 80% or 60% of this amount. Then we have, if we look the liability, we'll see there how much is the liability. Yes. These are the current liability, which is a short-term loans, which we need to pay within 12 months. We need to settle them. This is the long term. How much money in the long term they borrowed. Yes, it went down. You will see there that was 4,535 million. Now we have a 26 million this year. So because it's a tough, the government injected more money as well. So they paid off a lot of liabilities. Then general funds, yes, equity and revalues there. So it can be effect on their ratios. Last lesson we discussed, and I send you the links as well within our PowerPoint slide, and we can use the ratios. If you have more debt, it means your gearing ratio will be high. High gearing ratio mean high risk. Any question?
Oh no, that's okay, thank you.
Okay, brilliant. So I copied this you can copy this and you can look around the figures. This is the figures about how much in the UK is spending on the healthcare, yes, from last many years. Now we are moving towards 9.9% of our national income we are spending on NHS healthcare. Any question there?
Oh no, that's okay, thank you.
Okay. Plus I copied the link for you. Is a bit quiz, you can, we're not playing the quiz now, but you can even do yourself, you can copy this link. Yes, is a question.
Right, yeah.
Which one is the best, which is quite good to be help. It will help you to be develop your understanding, please. And if you have any question, you can ask me in the next lesson, which will go through budget or LO3.
That's good, thank you.
Okay, we'll keep up to here. Have a nice weekend. I hope so all will see you and speak to you next lesson.
Thank you, thank you.